Let's continue with our discussion of the statement of cash flows. All right. Right up here at the top, it says a building with a book value of $56,000 is sold for $67,000 cash. Using the indirect method, this transaction should be shown on the statement of cash flows as. Okay. Let's look at choice A. It says an increase of $56,000 from investing activities. Well, $56,000 is the net book value. We received $67,000 cash. Therefore, A is an incorrect answer. B says an increase of $67,000 from investing activities and a decrease to operating activities of $11,000. Well, I will tell you right now that is the correct answer. I want you to understand we received $67,000 and we sold a building, which is a long-term asset. So this transaction is automatically an investing item. Now this second part, you say, what about operating? If this was an investing activity, why do I have a decrease to cash from operating activities? Well, because you have an $11,000 gain here. It doesn't tell you that in the choice, but if we have a book value of $56,000 and we sell it for $67,000, we have an $11,000 gain, and that is a deduction from cash derived from operating activities or net income, however you want to put it. So B is our correct answer. Let's see here. C is wrong. It says 11,000. It was 67,000. That's not the complete answer anyway. D, it says an increase of 56,000. Well, we already know that the second part of D is correct, but the first part is wrong. It's 67,000, not 56,000. Okay. Let's look at this second question here. It says equipment with an original cost of $75,000 and accumulated depreciation of $20,000 was sold at a loss of $7,000. As a result of this transaction, cash would, okay, let me read this again. Originally we paid $75,000, accumulated depreciation is $20,000. And it was sold at a loss for $7,000. Okay, so the first thing we have to do here to figure out this answer is answer another question. What is net book value? Okay, what is net book value? The answer is $75K minus $20K taken over the time that we've used it as depreciation expense, which shows up on the balance sheet as accumulated depreciation. So our net book value equals $55,000. And it also says that we sold it at a loss of $7,000. Well, loss is calculated based on this number here. So if we were to subtract 7,000, we would come up with $48,000. So it says here, as a result of this transaction, cash would increase by $48,000. It doesn't ask you what portion of the statement of cash flows. It just says as a result of this transaction, cash would increase by $48,000 because that's what you sold it for. You have $48,000 that you didn't have before, and you no longer have the equipment that you used to have. So A is going to be the correct answer. All right, let's see what we have here now. It says cash dividends of $45,000 were declared during the year. So when that happens, we have a liability. Cash dividends payable were $10,000 at the beginning of the year and $15,000 at the end of the year. The amount of cash for the payment of dividends during the year is, well, this is actually a lot easier than it looks. We had a $10,000 liability at the beginning of the year. And then during the course of the year, we increased that liability by $45,000. That gives us a total liability, $55,000. Okay. Now, at the end of the year, we had $15,000. Right? So, solving for X, what is our answer? $40,000. That's what this is a similar question, actually. The amount of cash payment for dividends during the year, $40,000. Okay, so we got a little bit of financing stuff in here. Looks like we have a matching exercise. Says for each of the following activities that may take place during the accounting period, indicate the effect, A through G, on the statement of cash flows prepared using the indirect method. Choices may be selected as the answer for more than one question. All right. So, purchase of equipment. All right. Equipment is a non-current asset, so it is an investing activity. We are purchasing it. We're using cash, so it would be a decrease from investing activities. Decrease cash from investing activities is choice D. Repayment of long-term note payable. All right. So we've borrowed some money. That is a financing activity, but now we are paying it back. So we have a decrease. There it is right there, F. Decrease cash from financing activities. F. Amortization of intangible assets. All right. So what do you think? Amortization of intangible assets. Amortization of assets is found as an expense on the income statement. So what we're doing, I don't really like the way this is worded completely, but it is an increase to cash via net income. So increase cash from operating activities. A is going to be our correct answer here. Exchange of land for common stock. So we've given up an investing activity, land, for common stock, which is part of, well, we didn't really cover this. This is a non-cash investing and financing supplement activity is what this is. There's no cash involved. When we did this, think about it like this. Assuming, now it doesn't say anything about gains and losses here, so we're kind of making the assumption that whatever the fair market value of the land is, that's what we received in common stock, or if we gave up common stock, that's what we received in land, however you want to put it. So this would be choice G. We didn't go over that in the PowerPoint at all, I don't believe, but that is your answer, okay? Payment of dividends. Payment of dividends. Well, let's think about this now. Let's think about this. Whenever we had an investment in the company, what was that? That was a financing activity. So now we are paying that back via dividends. So we have a decrease from financing activities, F. So we've already used that one twice. Sale of land, not sure what happened with our lines here. So land is an investing activity. We sold it, so we increased cash. So let's see, increase cash from investing is choice C. Gain on sale of investments. We're only talking about the gain here. Okay? So that is going to be a decrease cash from operating activities because the cash increase came from an investing activity. So choice B is going to be correct. All right. Acquisition of treasury stock. This is also something, this is a little bit beyond the scope of this class. So this is when a company buys back their own stock. You'll learn more about that in accounting 2. So this, I'll just give you the answer. It is F. Cash went down. Increase in accounts receivable balance. We've kind of had this in prior questions. That means that we have some accounts receivable that contributed to net income that have not been included, that we have not received in cash. Therefore, that is a decrease cash from operating activities. And then decrease in accounts payable balance. Well, that is the exact same thing. The answer is B. All right.